Good morning, everybody. This is Jack Gleason with Startuptrading.com. It is July 31st, 2020. For economic news, this morning we had Canadian GDP, which came in at 4.5%, which was a beat. And then 8:30, we also had core price index and personal spending, which personal spending was a beat. Obviously, everyone's got their checks. 9:45, we're going to have Chicago PMI. And at 10 a.m. consumer sentiment and inflation expectations. I do want to take a look, because it's Friday, of just next week's events, just the red star ones. ISM at 10 a.m. on Monday, cash rate out of the Australian dollar Tuesday night, or I should say Monday night going into Tuesday. New Zealand dollar has some unemployment rate at on Tuesday. ISM. Here's going to be a big one for the pound. Thursday, we're going to have the MPC bank rate votes monetary policy statement and the official bank rate for the Great Britain pound. So that'll be a mover going into next week, possibly Tuesday, Wednesday, setting up into that. And then we're going to have the non-farm employment change and the unemployment rate, since it's the first Friday of the month. Also today, a reminder, for those who haven't checked the calendar, it is the last day of the month here for the markets, which often can lead to bigger moves. We've already had a pretty significant move in the overnight session, and I am going to start off with that. On the back of that economic news, we had Apple, Facebook, Google, and Amazon earnings yesterday after the bell, and we just skipped higher. Now, these often lead these earning events, and Perry went over it really, really well this morning, talking about what are the possibilities that we can do here in the NASDAQ. And I'm just going to highlight the NASDAQ because that is, kind of the real impacted market from those earnings events. They were all total blowout numbers. Amazon's revenue or profit was like 10 times what they were expecting. So these are huge blowout numbers. It's going to be very interesting. Now, in order to understand where we're going, we have to understand where we came from. The current support level that is consistently held here in the NASDAQ is a 50% retracement from the June 29th low. So basically the end of June to what was the high of July, and still is July 13th. We had this 50% retracement at 10,392. Now, we had a double top situation, and I always like to watch, this to me looks more like a range, where the 78% retracement of that range is. That's where we're stalling. Okay, and that's right at 10,910. Whether or not we can close above that level is to be determined here today. But what I'm going to highlight is the sequence that came out of yesterday's low. Now, the NASDAQ was the one market not breaking through the lows yesterday. The NASDAQ was holding its overnight lows very, very well around this 10,540 level. And then we had at 1050 our first 50% retracement long. And that's really when the uptrend began, and that was across every single markets. We then blew out into an extension that traded once to target. Okay, at 12:15 we had a same anchor new high here, and that traded into the close to its profit target. So going into the overnight session, since we totally blew through those profit targets on the earnings events, we then have the high from 10,719 to high. Now, there was actually really micro extensions here that had traded after the bell, and then there was an extension to extension which technically broke. And so what we're going to look for is we're going to assume we're bullish above this extension, which is the 10,718 to high. That is our overnight low, this 38% retracement. This zone here is where there will be, in my opinion, some support coming back and forth. 10,854 is that 38.2, and the 50% is 10,828. Now, if that breaks, I will use the original anchor from yesterday. This is the first anchor that began our move, the first extension anchor, and this is traded multiple times. It traded here. Oops, let me grab the right drawing tool. It traded here. It traded here. It traded here. And so that anchor to the overnight high, the 50% retracement would be right back to where I think this is just Apple, Amazon, and Facebook, and then, I'm sorry, Google, Amazon, and Facebook, and then Apple announced after, and then we had that final skip higher. That's going to be at 10,769. If I were to pick my favorite level here today, it would be this right here. But if we do open and we catch a bid off the open, we need to be aware of what that upside target is. I think it would be pretty difficult to get above 10,990, but that would be the first completion here. This 10,990 would be this first completion for the NQ. All right, so that's what I have for the NASDAQ going into the day. Now, what's interesting is the Dow, which Perry had mentioned in the morning trade plan, it's the weakest market, and believe it or not, the Dow is still holding shorts. We had this extension short. This is why this market, is a little tricky here today, because we don't have every market in a long setup. We began extensions last Thursday. They once a target. We then had them trade twice. They completed profit targets on Thursday, and we rallied all the way up into a same anchor new low, and we didn't even get above Wednesday's high. Now, the Dow, just like the NASDAQ, had this halfway back from lows coming out of 1050. We then blew through targets. We had an extension once, twice, 3 times, and then in the overnight session, we technically pierced at 61. Now, it was right at the European Open. You can see we pierced it, and we've come back into here as support, and you could even make the argument that we have traded a full 50% retracement long in a front run. I would expect, if we are going to continue this extension, continue to hold, if we start getting back below the overnight lows, I would be very wary of the Dow. I think the Dow is more of a two-sided market here, because we broke the extension series, we traded a front run of the long, we reacted off the short. So for me, the way I'm looking at the Dow here, I have a 26,169 support level, and then really resistance below the top of the range here would just be this 26,319, which is a halfway back from the overnight session. So I'm not interested in a long in the Dow unless we can test the full halfway back or break above the short and then retest. So the Dow is definitely going to be one I'm waiting on and probably just avoiding trading here this morning. The S&P, once again, these are basically the same sequences across all of the markets. We'll go to the hourly chart. Now, yesterday, there was this full 50% retracement that was, in the morning trade plan, and it was from the July 9th low to what was the July 31st high. Now, that was a 31.9475. We absolutely tagged that level. Okay, and we were going into yesterday morning in an extension series from, I think it was 32.42 half to low, traded to target right at the open. We had a same anchor new low that completed profit targets, and then the same anchor new low just completely broke out. Now, the reason it broke out is because we had traded this support level, okay, literally to the T. And that is when buyers just stepped in and completely reversed this market all the way to the end of the day. We had our full 50% retracement, just like we had in the NASDAQ, just like we had in the Dow, that began an extension that went once to target. We had a new extension going into close that completed targets. That same anchor new high is what we're going to use as our bullish above line in the sand here. We are bullish above the 61.8, which is a 32.37. Everything above 32.37 is a bullish setup. Now you can see this 50% retracement at 44.5 was front run by 1.25. The 38 then came in, and there's buyers at this level. The upside target is 32.87.5, and I'm just gonna leave it being simple as that. I do have a little bit of a resistance level from like 32.70 to 32.66 that might be hard to get above, but that is what I'm going to be watching here in the S&P 500. All right, just that simple extension. Moving on to oil, which is really, kind of the silent sleeper. I don't think many people were paying attention to oil yesterday, but oil had an incredible move and a giant volatility expansion. If we back out, we've been inside of this halfway back long from what was the lows of June 15th to the highs of the 23rd. We've been inside of this for a month and a half. We came out of it, we made a new high, and then yesterday our lows were basically a retest of that 38% retracement. You can just see it mark this up, and as it was trading yesterday, it called it out as we came into that 38.85. Now, we traded those 38.85s after going straight down in oil. We were down like $2 plus on the day, just straight down, and there was an absolute massive puke going into the 10 o'clock time frame. We reversed out of that low. We traded a traditional long at 39.50. We were front run by 4 ticks, which is a perfect front run for oil. We then broke above shorts and we traded our next halfway back long. So oil is perfectly bullish here, and we will continue to follow this series. We have 2 upside targets of 40.66 and 40.79. We have a perfectly bullish sequence here in CL with 2 upside targets. And there is this full 50% retracement short, but the higher time frame does remain obviously up. So I'm not necessarily very interested in shorting anything unless we would confirm that we would have to confirm that resistance by breaking these long sequences. But we can be aware that it's there. The full halfway back short from highs is right around 40.60. But because we are so technical to the long side, it's not something I want to take. Okay, but if we break shorts, we can be aware of why we broke them. It's a 40.61, it's a full 50% retracement short. But upside targets 40.79, 40.60, and then we'll have our next pullbacks. Moving on to the USDJPY, which has come into a daily extension short. The USDJPY has been absolutely hammered over the last week. And there's 2 different variations of an extension. There is the daily extension. It's the same anchor new low from the June 23rd to low. We've already traded this to profit targets. And then there's also an extension from 106.63 to low. Now, that 106.63 to low would be a 105.40. And that would be kind of what I would consider to be like an FU trade, where we stop some shorts out who are taking the more aggressive short at the 105.12 and run right into that. Now, the way to determine which one of these resistance levels is going to work is by following this extension series from the 104.99. Now, this is a micro series, but it's what's leading us higher and pushing us through the 105.12 as of right now. We have just completed those profit targets. So if we can get back below that 61.8, which is a 105.08, we will then confirm this 105.12 resistance and begin working our way down. And I tweeted this out, but look at this monthly chart. You actually see if I can just get rid of some of these drawings. We are on the brink of making or breaking, the next year of the USDJPY. If we can start closing below this 104.50. So this is very important support level. And then really, if we do that, I would have just simple support and resistance lines, nothing to the lows of 2016. And this has been a very bearish month for this market. So if we do continue to trade higher, there is the 105.40, okay, which is just the less aggressive extension. But if we can break below 105.08, we will begin trending back lower. And I think this is a pretty important market to watch here today. The Aussie dollar completed a halfway back long, which was from last Friday's low to the high of Tuesday. It completed at a 72.02. Now we have Tuesday's low to high at a 71.69 and the full 50% retracement from Friday's low at 71.44. The euro has also completed an extension. Let me get rid of this. The euro, the dollar, all of these currencies are in such aggressive trends. They're almost hard to get in. It's a 116.01 to high. We traded it, completed targets. That same anchor new high, the 38% retracement is a 117.90. That'll be the first support level here for the euro today. The pound, also super aggressive. Remember, the pound next week has basically what's equivalent to their FOMC event, which is going to make this an actively traded currency, a technical currency leading up into that. I believe I said it's either Thursday or Wednesday, but I'll have to go back and check. But we have an extension from the high, the first high of Wednesday, and that is a 129.94 to high. And that 38% retracement is a 130.96. That is going to be the support level I will look for here today, just simply 130.96. The USD CAD is sitting inside of our resistance. We're really not going anywhere. We had that GDP number, but this thing has barely moved. And so in order to do what we'd like to see for shorts is us validate the short setup by breaking the long, and then we'd have our next entry. You can see yesterday's high to low is getting sold into here. Okay, and if we complete that target, we would have a next measured move. And then gold, we've just pierced into a new high, and oftentimes when we pierce into a new high in gold and then fail, that leads to a reversal. So gold had a profit target of 2008. Well, we traded 2004 half. We peaked into highs, the European Open, and we've just traded a 50% retracement short to target. So we can fall, and it would be totally normal for us to fall here in gold all the way back into, because we can consider that profit target completed, all the way back into a same anchor new high. And our next daily, this would be a daily support level, would be that 38% retracement right around 1940. It's 47 points below. Silver, we broke out of our short, and so we have a 50% retracement long from Thursday's low to high here, and that's going to be at 23.76 half. And that's really all I have for silver. We are about to trade. The USDJPY just ran through that, so we were going to trade the 105.40 here in the USDJPY. But that's going to wrap up my morning trade plan. If you enjoyed this content, give this video a thumbs up for me. And feel free to share with anybody you might think was interesting. I'll catch you guys in the trade room. Probably only be around the first half of the day. Friday, past the European close, can get pretty boring. Although the last hour, I would assume, has some action. But everything from 11 o'clock Central onward till that last hour, probably going to be pretty boring. Take care. I'll see you guys in the room. This video, thumbs up for me. And feel free to share with anybody you might think was interesting. I'll catch you guys in the trade room. Probably only be around the first half of the day. Friday, past the European close, can get pretty boring. Although the last hour, I would assume, has some action. But everything from 11 o'clock Central onward till that last hour, probably going to be pretty